What's up, fellow traders? Hope you guys had a great trading day today because I did, and I'm very excited to share what my trades were like and how I managed to make money, right? If at all let's begin with a recap. If at all you guys did watch my video yesterday, we had discussed certain things, and let's look upon that on our charts, right? So we had decided yesterday that it would be a bear trap if the markets opened above the immediate resistance, sustained, that was above 17,200, and they sustained. And if there was a continuation candle or any further upside, that's when it would be a bear trap, and everybody who was short in the market would run for their money and run for cover, right? So it was indeed a very tricky move today, the opening, when no one actually expected it. Nifty gapped up almost 150 points, Bank Nifty was up 350, 360 points. No one expected that. With the global markets bleeding, no one expected that. But the CPI inflation data was out, and probably it was just a stop loss hunting move in Dow Jones, and that reflected on SGX, and we were led to a gap up. But now, this is how I analyze the market for today, right? What I actually thought of was, if you happen to see this zone, right? 1 second, allow me time to. Yeah. If you happen to see this zone, right? Sorry about the delay. But yeah, if you see this zone, this was a very, very strong resistance because the markets had fallen exactly from here, and we opened exactly in that selling box, right? Now, one advice and a trading tip that will really, really help you is, if at all you trade on whatever time frame, whether it's 15 minutes, 5 minutes, 3 minutes, 1 minute, 1 hour, whatever, right? Everyone has their own trading setups and strategies, but whatever time frame you're working on, you always have to wait for the candle to close, right? This is a very unpopular opinion, not spoken about, but please understand the importance of this, because I've learned it the hard way. When I started day trading, I used to jump on every running candle that was a potential breakout or a breakdown, and trust me, it will blow your account someday. Let's not do that, right? Wait for the candle, let the setup walk up to you, let the trade come up to you, and that's exactly when we initiate the trade with the most favorable risk reward, right? So now why I talk about risk reward is, imagine we opened in a selling zone today, right? And anybody who went long, because at some point the candle did break out within the running candle, it did break out over the selling zone, and anybody must have thought during a running candle that, this is a good time to go long and let's make all the money in the world today. But that's exactly what did not happen, right? Wait for the candle to close, wait for a follow-up candle, wait for a confirmation, and that's where you initiate your trade. That's rule number 1. Okay, so that's what happened. Now, where I initiated my trades was one very simple setup, which probably everyone talks about, but nobody actually believes in trading being simple or easy, right? Everyone thinks the most complicated strategies you learn, and that's the only way you can make money, but it's really, really simple if you could keep it easy for yourself, right? So my setup over here was pretty simple. When this happened, when I saw a resistance being tested exactly over here, right? If you can follow my cursor, if this was the zone where the resistance was broken, the day low was broken, that's exactly where I initiated my trade, with the day high being my stop loss, right? This around below 17,100. However, I traded in Bank Nifty, but yeah, this would have been the same setup because that's something similar that happened in Bank Nifty too. Below the day's low, with a confirmation, with a rejection, it was a pretty simple setup, a one-sided move, and for a naked option buyer like me, I think this was a good way to make money, right? Anyway, that was Nifty, and what actually happened in Bank Nifty was, if at all you did follow my analysis yesterday, we had this marked on our smaller time frame, this downtrending trend line, right? You see this downtrending trend line, this, we were very aware of this, and this is exactly where I did not initiate my trade, because I did not hold any long trade or build a long position here, because I saw the first candle facing rejection, right? And also it opened in a selling zone and a downtrending trend line, so I was pretty sure about this. And when the day low broke and it retested the trend line, this is exactly where I shorted, and I booked my profit somewhere around 39,200 as discussed yesterday, right? So that's what happened today, but it really doesn't matter what happened today. Now let's focus on what's going to happen tomorrow, right? And after uploading my video yesterday, I got a few messages from people who also wanted some help or analysis along with Dow Jones, the US market, and SGX Nifty. However, SGX Nifty, I really don't have a lot of conviction over, because it potentially shows you something at night and something completely different in the morning. So let's not be very dependent on SGX Nifty, because it gives you emotional trauma, right? You just think you're going to go buy a McLaren the next day and then you wake up with the biggest loss of your life. It's really not worth it. So anyway, Dow Jones rather has a setup that we could discuss. We'll discuss it only on daily, right? So if you notice this in Dow Jones, this was a downtrending trend line, right? And 1 second. And if you notice, right, if you follow this pattern, this could very well be a double top or a head and shoulder. Now, however you look at it, right, everyone looks at it differently, so I'm really no one to say. But in any kind of a bearish pattern breaking down, right, if with this candle breaking down so strongly, now I really don't see any support before 31,200. That gives a space of almost 1.5% from here. So I am expecting a bearish move even in our markets, because global markets, if you happen to look right now, FTSE, the UK index is down almost 2.5%, and Germany is down, Spain is down, US is down, dollar shot up quite a bit, and that is detrimental for our markets, Asian markets, and all the markets that's around, Japan, China, Hong Kong, all of that, right? Anyway, let's not get into a lot of details. Let's just come back to what we could do tomorrow. So we could begin with daily, and this is what I analyzed on a Nifty daily, and let's see what we can make out of this, right? So I realized this would make it easier. So if you happen to see this, right, 1 second. Yeah. If you see this, this is marked as the R stands for resistance and the S stands for support, right? So if you see this zone, the green zone that's marked on the chart, R1 is the resistance 1 faced on the 3rd of June 2022, and R2 is the resistance faced on 21st July 2022, and eventually after that was taken out, we had a really strong gap. Now, gaps are very emotional points of trade and transactions, because this shows sentiment. This shows an extremely bullish sentiment where the market opened almost 16,600, almost 150 points gap up and continued to rally further. So it's a very bullish sentiment, right? So this is our first support. This S2 is our second support. Now, with the zone being so strong where it could provide resistance twice and provide support so many times, yesterday we had discussed that if at all we see any kind of pullback or some dead cat bounce or a minor recovery, that would only be from the 400 DMA, and that actually did work out. This was a very good place to book your shots in, if at all you were holding any. And now what I expect from the market, I'm actually short in the markets. I'm short Banknifty at the money right now. And we'll discuss how I analyze my trade and why I'm holding BTST despite the markets being so volatile and risky right now. Okay, so now if you look at global markets, they are bleeding. Singapore's down almost 100, Dow Jones is down 1.5%, markets down 2%, right? So highly likely, unless I don't know, the corona vaccine is made again, there's really no good news in the markets right now. Financials look bad. The whole Silicon Valley, Credit Suisse, all these banks not doing well. It's bad for the markets, right? So now the reason I shorted is, you see the candle that's on a daily. If you see the candle on 14th of March, this was the follow-up candle of the breakdown that happened on 13th of March of the channel of the falling wedge, right? That was the breakdown. Today the gap up is nothing but just a retest of the breakdown of the falling wedge, right? The falling wedge breaking down. I always tell people that I teach that whenever a channel is broken down, never ever initiate the trade at the breakout or the breakdown. Always wait for a retest, always, or any time frame for that matter. And if you happen to miss it without a retest, it's only good for you, because breakouts and breakdowns that do not retest an important support or a resistance usually crumble into bits and could be a trap. So now I'm pretty confirmed about the down move, and I expect Nifty to probably, I don't see any retracement or a bounce before 16,750 levels, 16,800 to 16,750 levels. The reason being, it's with such a strong important resistance earlier and now a support. So, and as we discussed yesterday, right, this is the vision that I have. I could be horribly wrong about this, but I strongly believe that, let me just get rid of this, right? I strongly believe that this is just the beginning of a head and shoulder pattern, right? You see this is the head, and from here if we bounce, and then eventually fall down, yes, the fall could be tremendous, right? It could be an incredible fall. So that's what I have in my vision for Nifty right now. I see a fall. Probably we might just we'll discuss the trading strategy eventually on a smaller time frame, but I don't see any bounce before 16,750 to 800. That's the verdict on a daily, right? Now looking at on a smaller time frame, how we could trade Nifty tomorrow is okay. Now tomorrow could be really tricky, right? Now we have our expiry tomorrow, and expiries, oh, they have their own way of playing out, right? I mean, they could be the best or the worst day of your life. I've had tremendous experiences doing really well on expiries, and some expiries is thinking, why do I even day trade, right? It doesn't make sense to me. But always know your risk, always know your reward. That really helps. Work on your psychology. That helps a lot. So anyway, everything aside, how we trade this is, I am considering my bias is negative. The markets look negative, technicals, fundamentals look negative. I am not going to be looking for a long trade at these levels, right? Now, what could happen is, yesterday we discussed this gap that you see, right? This is the pending gap in Nifty. That is, from a closing point, we have like around 80-90 points to fill the gap, right? Now, there are three scenarios again how the markets might open tomorrow. One, the markets might open gap up, highly unlikely. I don't see the probability looking at markets right now unless there's some mega recovery. But if at all the markets open relatively gap down, right? If they open like 80, 100, 120 points gap down, if we open below the gap, right? If we open below 16,880, that's marked on the chart. If we open below 16,880, it wouldn't be the most ideal time to short, because you've lost 100 points and the risk reward does not really allow a fair trade for you. So in any case, we open anywhere below 16,880 where the gap is missed, right? What we could do is we could wait for a pullback, right, until today's low. If at all, for example, we open somewhere here, right, we could wait for a pullback like this, and at any point, if the day low is taken out, that's an amazing spot to create a fresh short position, right? And targets in that would be big, because if we short somewhere around 16,880 on a rejection, a top pick or whatever, we will definitely get around 100-150 points in Nifty, and that's a big target that could probably come tomorrow because it's expiry and you can expect the unexpected, right? That's one thing. Now, the second thing could be, if we open gap up anywhere, do make sure that you have this trend line on your 15-minute time frame, because it has been of certain significance until now. The trend line is respected every time it's made contact. So do have this trend line, and if at all we open anywhere near the trend line and we happen to take rejection from that, we will definitely be shorting again, to first target being today's low and the second target being the gap, right? Now, in any case, the markets open massively gap up, the same strategy prevails. If the markets open above 17, let's consider the 50 moving average, right? If the markets can open around 17,130, that's 60 to 70 points gap up, and they do happen to consolidate between 17,120 and the resistance at 17,200. Between 17,100 and 200, the markets happen to spend some time sideways. After 1231, it could be an amazing breakout, and we could make some real good money on that, right? Because consolidation before the breakout is the most essential part for a breakout, for a sustainable breakout. And the third condition being, if we open flat, 20 points plus minus if we open, and at any given point we take down the day's low. But again, let's not forget the rule that we discussed: wait for a 5-minute or a 15-minute candle to close below 16,950. After opening flat, if we do close below today's low, we will definitely trade the gap, and if further downside prevails, we will be grabbing big targets, and it could be a really profitable expiry for us, right? So that's Nifty for now. What else? Yeah, let's come to Banknifty. This is the index I trade the most. I'm rather comfortable with Banknifty over Nifty, probably because I'm crazy as a person. I'm very volatile as a person, and this matches my personality, right? So yeah, now having said that, if you notice, I've made some points on a daily chart. This is just for your explanation and ease. If you happen to notice this, allow me a minute.